3 years ago, a homeowner in Miami had a promise. Insurance. A contract that said, if disaster strikes, we will be there. We will rebuild your life. Today, that promise is revoked. Not because they stopped paying, not because they burned it down themselves. The insurance company looked at the climate, looked at the hurricanes, looked at the math, and decided the promise was too expensive to keep. Right now, millions of Americans are getting the same call. They're hearing the same words. We're sorry. We can't insure you anymore. Not because of what they did, because of what the world is doing. State Farm insures 80 million American homes. For decades, it was the trusted choice. But in 2023, State Farm announced something shocking. They lost $3.7 billion on homeowners insurance in a single year. Not millions, billions. That's not a business problem. That's a collapse. And when a company loses that kind of money, it doesn't stay. State Farm stopped accepting new customers. In Florida, then California, then Oklahoma. Hundreds of thousands of people tried to buy insurance in 2024 and got one answer: no. Allstate watched. Then Allstate made the same choice. In June 2024, the company announced it was exiting the Florida homeowners insurance market entirely. No new customers, no renewals, just leaving. And when a company like Allstate leaves, millions of customers get a letter. Your policy ends. Find someone else. Good luck. Except there is no one else. When insurance companies disappear, there's supposed to be a safety net. Every state has one. In Florida, it's called the FHOA, the insurer of last resort. The name tells you everything. The last place to go when everywhere else said no. It's supposed to be temporary, a stopgap. But the FHOA has grown to 900,000 policies. That's not a safety net anymore. That's a primary insurance company run by the government, underfunded, and if a major hurricane hits, it doesn't have the money to pay claims, so it raises assessments, which is government speak for, we're billing all our customers extra to cover our losses. You're not just paying for insurance, you're paying for the collapse of the insurance market. Maria lived in Tampa. She'd lived in the same house for 18 years. She had the same insurance company for all 18 years, State Farm. She paid her premiums every month, never once missed, never filed a claim. She did everything right. In 2024, State Farm sent her a letter. We are not renewing your policy. Maria called her agent. The agent said, start calling around. State Farm is not accepting renewals in Florida anymore. Maria called every company she could find. State Farm, no. Allstate, no. Travelers, no. One company said yes, but the premium was $12,000 a year. Maria's old premium was $1,400, 8 times higher. She didn't have $12,000, she barely had enough to pay her mortgage. So Maria did what millions are doing. She went to the FHOA, the government backup. She could get insurance, but it would cost $8,500 a year, 6 times what she used to pay. 6 times. That's $7,100 extra per year on top of her mortgage, property taxes, everything else. Maria is a school teacher. She accepted the FHOA insurance because she had no choice. But now every dollar counts. She's thinking about moving, leaving Florida. She loves her home. But the cost of staying is becoming impossible. In 2022, Hurricane Ian hit Florida. It destroyed communities. It killed people. It destroyed the financial math of the insurance industry. The total insured losses from that one hurricane exceeded $13 billion. Insurance companies had to write checks for $13 billion. Every penny they'd collected in premiums for years went straight out the door to pay claims. And then they had to sit back and think about the next hurricane. Because there's always a next hurricane. Between 2021 and 2024, something shifted. Insurance companies employ thousands of climate scientists, not environmentalists, but scientists with computers and decades of weather data. They build models. They look at hurricanes from the past 100 years. They look at ocean temperatures, atmospheric conditions, and they ask, what should we expect in the future? For a long time, the answer was reassuring. The future will look like the past. But the insurance industry updated its climate models. The new answer was scarier. The future will not look like the past. It will look worse. Climate change is not a future problem anymore. It's a present problem. Hurricanes are getting more intense. Rainfall is getting heavier. Floods are getting more devastating. Insurance companies realized they had made a catastrophic mistake. They had priced all their policies based on the old climate, the stable climate, the climate from 50 years ago. But they are selling insurance for the new climate, the dangerous one, and the prices they'd set were catastrophically wrong. Here's where most people's eyes glaze over, but stay with me. Insurance companies don't carry all the risk themselves. They buy insurance for themselves. It's called reinsurance. When you pay State Farm $1,400 a year, State Farm keeps a portion and gives the rest to global reinsurance companies like Munich Re and Swiss Re. Think of it like this. You insure your house. They insure the insurer. These reinsurance companies make money by betting correctly about hurricanes. For decades they made good bets and huge profits. But in 2024, they also updated their models and also realized the risk is higher, much higher. So they raised their prices by 30 to 50% in 1 year. That cost doesn't stay in Switzerland. It comes straight to you. When Munich Re charges State Farm 50% more for reinsurance, State Farm has two choices: raise your premiums 50% or leave the market. State Farm chose to leave. Insurance companies measure themselves by a number called the combined ratio. It's brutally simple. Collect $100 in premiums. How much do you pay out in claims? If you pay out $80, your combined ratio is 80, you made money. If you pay out $120, your combined ratio is 120, you lost money. For decades, insurance companies operated at ratios of 95 to 100, making small, steady profits. In 2023, the homeowners insurance industry crossed 100. For the first time in years, insurance companies were paying out more in claims than they collected in premiums. They were bleeding money. Across the entire industry, every major insurer, all at once. That's when the industry realized, we can't continue. Either prices have to double, or we leave the market. Most chose to leave. Some insurers didn't leave gracefully. Universal Insurance Holdings was Florida's third largest homeowners insurer. Hundreds of thousands of customers trusted them. But Universal didn't have enough money to cover all the claims. The company's stock collapsed, down 80%. Employees started looking for other jobs. The company was hours away from bankruptcy. If Universal had failed, hundreds of thousands of Floridians would have lost insurance in the middle of hurricane season with nowhere to turn. Only emergency intervention by Florida regulators prevented total collapse. But the message was clear. This system is fragile. It can break. And when it breaks, normal people suffer. California is experiencing a different disaster, but the same root cause: wildfires. They're getting bigger, more intense, more frequent. Insurance companies did the math and realized homes in California's fire zones are too risky, so Allstate stopped writing policies in California. State Farm stopped accepting new customers. AIG pulled out, and something horrible happened. People who lost their homes to wildfires discovered they couldn't rebuild. Because banks don't give you a mortgage without homeowners insurance. And if you can't get insurance, you can't rebuild. Your home is gone. Not because you lost it to fire, but because insurance companies decided it was too dangerous to insure. Some California families are still living in RVs 3 years after losing everything, waiting, hoping, unable to rebuild. Here's what most people don't understand. Insurance and mortgages are linked. Banks don't give you a mortgage without homeowners insurance. It's not optional, it's a requirement. The logic is simple. If your house burns down and you don't have insurance, you won't be able to rebuild, and you'll default on the mortgage. The bank's collateral vanishes, so banks require insurance as a condition of the loan. But what happens when insurance disappears from the market? What happens when millions of people can't get it? They can't refinance their mortgages, they can't sell their homes to people who need financing. They can't rebuild after disaster. The entire real estate system depends on insurance being available. Remove insurance and the system freezes. This isn't hypothetical. It's happening now in Florida and California. Millions of people like Mariah have moved to the FHOA, the government-run insurer of last resort. But here's the problem. The FHOA is not designed to be profitable. It's designed to be a temporary backstop. It loses money every year. It's subsidized by taxpayers and by surcharges on other insurance policies. And if a major hurricane hits, a real Category 5 that causes $30, $40, $50 billion in damage, the FHOA doesn't have the money. So it issues assessments. Basically, every person with an FHOA policy gets billed extra, thousands of dollars, on top of already high premiums. This is no longer insurance. This is a system on the edge of collapse, held together by hope and prayer. Some people say, insurance companies are greedy. They should lower prices and stay in the market. But let's do the math. If State Farm is losing $3.7 billion per year, they can't simply decide to stay. Their shareholders won't allow it. Their regulators won't allow it. If they stayed and kept losing money at this rate, they'd be bankrupt in 5 years, and then no one would have insurance. The hard truth nobody wants to hear. This isn't about greed, it's about climate. The planet is changing, storms are getting worse, and the systems we built to manage risk are breaking because the risk is changing faster than our models can adapt. Climate scientists saw this coming. They warned about it, an uninsurable future. Because as the planet warms, extreme weather becomes more frequent and more intense. Insurance assumes the past is a guide to the future, but the past is no longer a guide. The past was a stable climate. We're moving into a new climate, one that is more dangerous, more unpredictable. Insurance can't function in a world where the climate keeps changing and the rules keep shifting. The system was built on an assumption: stability. We don't have that anymore. There are possible futures. 1. The market stabilizes. Prices triple. Most people can still afford it, but they're squeezed. 2. The market stays broken. Fewer homes can be mortgaged. High-risk areas empty out. Real estate collapses. 3. Government steps in, creates public insurance, spreads the cost across all taxpayers, socializes the risk. 4. The system breaks and there is no fifth option. Each path involves pain. All of them involve sacrifice. None of them are the normal life people expected to live. This is what an uninsurable future looks like. Not apocalypse, just this. Homes in beautiful places sitting empty. For sale signs that no one can fulfill. Families forced to leave because they can't afford insurance. The bedrock system that let ordinary people buy homes and build lives cracking under the weight of a changing climate. For centuries, insurance worked. You paid a premium, you had protection. If disaster struck, you rebuilt. It was the foundation of stability. That foundation is breaking now, not because of failure or greed, but because the world changed and the old rules no longer apply. In the coming years, millions of people will wake up to what Maria woke up to. The protection you thought you had is gone. Not through your fault, but because the planet is changing faster than the systems we built to manage risk can adapt. We built insurance for a stable world. We're living in an unstable one, and we're not ready.